right now, let's go over to TFNN.com. We're going to go over to the services tab. You're going to see two fantastic webinars. This is from Tim Ord. These are the secret science of market tops, how to identify those market tops, and the 6 secret ratios every trader should know. Again, I really leaning towards recommending the secret science of market tops right now with how this market is behaving. Really strongly recommend checking these out. Additionally, I implore you to go to ord-oracle.com. This is Tim's website. When you go there, you can check out his newsletter and his book as well. Strongly recommend doing so. Tim Ord, how are you doing?
Good. So thanks for the introduction. So we changed things up a little bit. I'm actually going to kind of run the charts, and the reason why we can kind of point to stuff that's important here. So actually, let me get to chart 1.
Sure.
Anyhow, we showed this chart before, and kind of knew running these arrows and stuff, but I'll get better as time goes forward here. But anyhow, this is it's a 3-week average of the American Association of Individual Investors Bull Bear Ratio. Mm-hmm. Anything below 0.75, we're coming in right now. It's blocked out. I think it's 0.70. Anyhow, we're basically at the bullish levels. And the chart goes back to 2017. But this kind of stuff moving around here. But this is kind of dictates the bigger trend, what's going on. So, in my opinion, even though we did go down in 2022 when this ratio was bullish, right. Previous times it pretty much marked near lows. This can be off a little bit, but in general, this is bullish for the market, most likely for the rest of the year. Not saying we can pull back, test the recent lows we had here back in will be January. Which actually I'm starting to look like things that gap down there at 585. We'll actually get to it anyhow, but this is a bigger picture. This chart, once it gets into bullish territory, normally you don't get big declines. True, it did go down in 2022, but that, in my opinion, is an anomaly. I got this chart going back like 2000, and probably 90% of the time it was close to lows. So this chart's bullish. We go on to chart 2. This is a little bit in a shorter term, and I actually got 2 different methods here of measuring strength in the market. The bottom window is the advanced decline with the 5-day average, and when it goes from 0.7 to 3.0 in 30 days or less, it's usually a initiation of an uptrend, is what I call it. And the shaded areas in the past, if you can look back there in 2020, looks like 2023, we had initiation off that bottom. Then in 2023 again, it looks like about May we had initiation, and basically in October, November of 2023 again. I'll get better as time goes forward.
Yeah.
So, but anyhow, I had initiation off the bottom, and again, started in December, and kind of ended in January. We had initiation coming off the bottom with that red arrow showing there. So, normally they form at bull market bottoms. Again, you can have tests up to the lows, but you're probably seeing the low for the year. Is how I'm putting it. And the top window kind of works the same way, but it's on a bigger time frame. It doesn't give as many signals, but in general, it's a summation going from minus 300 to plus 200. And if you notice, this indicator on top here, which is that shaded pink area, triggered at the same time as the bottom indicator did. So you got 2 different types of method triggering the same thing, and it's basically initiation of an uptrend. So this year, in my opinion, will be up. I thought at one point it may be up around 5 or less than 10%. I'm starting to see probably something better than that. I think we'll be actually double digits this year.
Okay.
So at one point, we were kind of leaning bearish.
Yeah.
And I kind of turned to neutral, and now I'm starting to lean bullish, which may change again. But these are kind of powerful statements. They usually mark, you don't have these indicators flip initiation of an uptrend in a down market. So let's go on to another indicator.
Yep.
This is a wag breast thrust indicator. And it also only forms in bull markets. You can have tests of lows, but not usually a downtrend. And we got one signaled again in January, a totally different method against the other two previous methods. And it also triggered a Zwag breast thrust indicator, I call it, or actually that's what the name is. And it goes from basically 0.4, actually hit 0.41, didn't quite hit 0.4, which in my opinion is close enough. Then went to, and had to go to 0.6 in 10 days or less, and it did this in 6 days. So I think that's close enough. And once you get a brag thrust indicator, we're in that, when that indicator got triggered is the times when that is actually a support area. So basically the decline is done for the year, according to this indicator, even though you can go back down and test those lows in general should hold.
Sure.
So you got three different type things going on here. All of them are actually lean bullish or actually outright bullish. So let's look on the short-term basis. I was kind of thought about shorting this market. Mm-hmm. And this is a short-term indicator that I go through, I kind of watch how it goes through, and it kind of just picks out the small stuff, not usually long-term tops or bottoms, but the blue line, actually what it is, the middle window is a 10-day, or actually it's the SPX tilt ratio on a daily, and the top window is the RSI for that ratio, so it's a 10-period moving average, not a 14. And so when this RSI of this ratio, so it's basically the equity market against the bond market is what it's measuring. It measures the velocity between those two. When one gets too strong compared to the other, usually you got a high or a low. So it picks out lows really well. And and usually at a minimum stalls a rally. And last time we got triggered on this indicator came in basically the January high. And the market did fall back. Didn't fall back much, but to really get a decent signal, since this is a short-term indicator, this indicator, if you look at the top window, should be up around 70, and we're coming in around 50. So I'm kind of hesitant to short to market because of this indicator. If you notice in the past, it picks out pretty much all the decent highs going. This chart goes back, looks like about a year and a half. And we're neutral here. If this indicator is back up around 70, RSI around 70 on this SPX tilt ratio, I'd be more inclined to short the market here. And not a big short, just a pullback in an uptrend is how I'm defining it. But it's not giving me a signal.
I see. Well, Tim, please stay right there. Looking forward to hearing what else you have to share with us. Folks, we'll be right back. Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, I know over the past few sessions we've had here, we've both been looking like, hey, this might be kind of just a sideways market with some volatile movement. So you're kind of starting to see, I guess, some indicators that suggest this might actually be bullish.
Yeah, I think probably the bottom's in for the year.
Okay.
And not saying we can test that low, but that's about the worst case scenario now. So I'm kind of looking for a short-term trade. And I thought, getting back to chart number 4 here,
yep,
which is the SPX tilt ratio, if that was up around 70, I'd be really leaning pretty hard to short to market. Not a big decline, but let's go to chart 5. Mm-hmm. But a pullback to this gap area I have down here. I guess you can kind of see it on my chart. I thought we might pull back down to that gap and fill it, and that's pretty much it. But if you notice, I got a lot of trend closes in here in the panic area, all kind of in that blue area. I'm kind of circling right there.
Right.
Well, once you get panic in a region, if you go back into it, you get panic again. So you got a lot of support between 580 to I don't know, around 600, 580 to 600. That's where all the panic happened, and panic only happens at bottoms or support areas. Either basically it's the same thing. But anyhow, I thought we might pull back down, fill that gap, and I'm not sure we're going to do that because of this chart here not showing the SPX tilt ratio getting the RSI up around 70. So maybe we hit it next week. I don't know. If that's the case, then that short may still be alive. But the way it sets right now, I'm going to kind of a wait and see. If it does go down without me, it's not a big deal because I think the trend's up. If we do manage to pull back, we start seeing trend in the 1.2 range and higher, I'll be lining up on the long side again. And so we'll have to wait and see. Patience kind of name of the game.
Yeah.
And right now I don't have all the ducks in a row per se, but we do have a VIX divergence. If you notice this window down here, second window up from the bottom, the Bollinger Bands are starting to squeeze on the VIX. In other words, VIX has been relatively quiet over the last couple of weeks, and normally quiet leads to volatility, and volatility leads back to quiet, so it just goes back and forth. And so this is saying something here, but this is expiration week too, which normally leans bullish, so we'll have to wait and see. But next week could be an interesting week, and maybe for some reason the RSI of the SPX tilt ratio jumps up to 70, over the next couple of days, don't know. But this was my thought over the near term. We might see the gap get filled. But from there, I bet we move higher. And I'm thinking we're going to see double digits this year. So if you asked me a month ago, I said, no way. But now I'm thinking there's a possibility that may happen. So equity market looking better as we kind of go forward. I guess the public's getting used to Trump's tariffs, I guess. They don't think it's a big deal. So let's look at the gold market.
Absolutely. Yeah, let's move on. I mean, we were covering the GDX a little bit today when we started. I mean, up 1.83% today. I mean, the GDX is, at least some of the other miners are very strong right now in today's market, at least.
Yeah, actually, this is kind of a review here. This is, keep showing this chart. The bigger trends run the smaller trends. So if you get the bigger trend in your back or in the direction you want to go, normally your trading success will eventually play out. But this is a monthly chart again. It's kind of getting an old hat. I probably should quit showing it, but it's a good reminder where we are in the market. The gold stock index market is in a bull market, period. And until this two indicators, which is the monthly GDX up-down volume cumulative, it's the bottom window, and the advanced decline cumulative, next window up. When both those indicators close below mid Bollinger Band are times when this bull market will end. And the previous signals of this type last a year and a half all the way up to 4 years. So we're looking at the bigger trend here. We're still early in the trend. It's not even been a year yet. I think I got the trigger on this indicator back in May of last year. So it's about 10 months into the signal. So we got a long ways to go as far as time is concerned.
I see.
Here's an indicator that this is a short-term indicator. It doesn't pick out. It picks out short-term highs. All those blue lines across the chart are times. The second window down from the top is the daily inflation deflation ratio, and the top window is the RSI for this ratio. And it's kind of the same thing. When things move too fast, normally they hesitate, and all the blue lines are times when this RSI of the inflation deflation ratio got near 70 and above, and it just got 70 last week. So that kind of tells me that we're probably going to stall here. Got support on GDX around 39, I think around 160 area, or 155 on XAU. Nothing, a big pullback, more or less a consolidation and an uptrend. And so the market is going to probably rest here a little bit, maybe several weeks, but don't be, it's not going to be a decline of any consequence other than a mild consolidation and an uptrend. But here's what was probably developing here. The bottom window of this indicator is the 50-day average of the up-down volume, and once it gets above zero, which it is now, it's usually, that's where the majority of stocks start to move up. I mean, it starts before that, but really when it gets above zero is when all the energy in the market starts to happen. So it actually is above zero now. We're around, last time we showed this Tuesday was around +1. Now we're around +5. But we're in a consolidation phase. If you look at this top window, I have a dotted blue line across the tops there going back to mid-2018. Well, the 43 area is an important area. That's the top of 2020. We had a top in 2024 right around that area, and we're banging against that area right now. And the most bullish thing could happen here, we just bang around in a trading range and actually build energy right before the breakout. And when these breakouts happen, to break that trend line going back, 5 years ago, it takes a lot of energy to do that. And what normally happens is kind of an explosion through that trend line. It's the old Weiskopf method. If you break a previous high, it has to come on higher volume. And the longer the trend line, the more bullish it is. Right.
Well, fantastic. Tim, is there anything else you want to add to the chart? Do you want to wait till the next break, or you?
Yeah, I can come back.
Oh, fantastic. Well, folks, stay right there. We'll be right back with Tim Ord right after the... Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. We are joined by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Strongly recommend doing so. Tim, before we went to the break, we're looking at the GDX ADP. Kind of to summarize what you're saying, any pullback would be really like non-consequential. Essentially, you could see some kind of build up in a narrower trading range, kind of building energy for the upside, right?
Yeah, that's what's going to happen here. We're going to probably, I think it could be a month or more. So they're going to bore you to death. That's the wrong word, but they're going to bore you. You get energy, then you get dullness, you get energy, this goes back and forth. And we had quite a bit of energy coming off this low of 34 to, I don't know where it was, 34 to 42, whatever it was. And now that's needs to consolidate and probably going to have a rotation of stocks. Stocks are probably going to start popping in this area, even though the market may be consolidating. There'll be a lot of energy going around, and some of these little stocks are going to start popping. But what comes next is something stronger that we haven't seen before. The only reason why I say that, to break that trend line that goes back 5 years, you need a big sign of strength. And that's what's coming next, a bigger sign of strength than what we have seen so far. So it's going to be, and it'll probably be lead to some sort of a worthwhile high that may last several months, but it won't be the final high. But, I think this thing could consolidate probably all the way through March and really start taking off maybe in May, then run till September or something like that. But the strongest part of the rally so far on this uptrend that started last May is still in front of us. I'll put it that way. So there's going to be quite exuberant. If you look down at the bottom here, this bottom indicator, once you get down below -20, basically it's the 50-day average of the up-down volume advanced client indicators. Once you get below -20, which we did, looks like about January, at a minimum it gets to +10, all of them. And this is going back to 2018. So we're right around +5 right now. At a minimum we get to +10. Then we get to chop around for several months above that. But when that chop is going around, there's a lot of stocks performing very well when that happened. Actually, they're starting to perform pretty well right now. So there's no top of any consequence here other than short term. And if you do manage to get pulled back to 39 area, most likely that's going to be support, and probably most likely that'd be a good buy area. Not saying we go back up and come back down again and test that area again. This is not set up for a top of any consequence. It's just a pullback in an uptrend. So if you see some stocks, gold stocks especially, that are near support areas, it's probably a good idea to buy them. And I'm looking at a lot of different stocks here, and there are a lot of them on, good buys, I guess you might say. Some of it's already broke out. So the good parts start to come, but over the next, I'd say month, it's going to be just a consolidation phase. Is actually the best breakouts happen when you build energy right below the breakout area. You build a consolidation right below the breakout area. And that's what's going to happen here. So it's kind of a hard pattern to form. You don't see them very much,
sure.
But when you do, you want to take advantage of it. So
Absolutely.
Of all the stuff that's going on, and nobody's really super bullish on the gold issues yet.
I agree.
And that will come towards the end. So when most of the gains are already made, and it's getting late in the bull market, when everybody's starting how great it is, that's usually the time to look for the exit door. But my opinion, we're a long ways from it.
Definitely. And to that point also, Tim, you have so many, guys my age, even younger, right? I'm 28. So, you have people in their early 20s and all in between there, even in the 30s, who are really starting to trade seriously now, or at least just take some kind of interest in it, right? And gold is just never on their radar. And of course it hasn't been, because the entire time they've been growing up and learning about things, we've had, near zero Fed fund rates. Everything's been growing an insane amount. Of course, really coming to around COVID time, we've had just such unbelievable growth in equities, and of course the advent of crypto. And you're starting to see, some threats to that, right? And I believe gold really is starting to get a fair look by a lot of the new traders. Obviously, the miners really follow through with that, so that would be fantastic to see.
Right. This is basically the only penny stock out there.
Yeah, so, on.
Most of these are penny stocks, and they're going to be 10, 100 times before this thing's all over. Back in when Tom and I were talking, we had this one company, BGO, that I bought on the air for a quarter, went to $15 for like 2 years. So, and anyhow, it was. And I think something like that, it happens every 20 years, and we're basically on the 20-year mark.
Sure.
So this about happened again. So which ones are going to go 100 times, I don't know. But some will, or a lot of them will. And even the ones that are not worth anything will go up, just because the sector will pull them up.
Absolutely.
So it's kind of an unusual time in history, and so it's something I waited for a long time to get back into this bull market. But anyhow, if the things change, and they may, I got indicators that notify me that this is not what I was hoping for, but right now, all the signs are there for that made that what I just talked about. Some of these stocks go 100 times are there. Will it actually happen as we go along? We'll have more clues to really define that as a possibility or not. But right now, I'd say yes, and that may change in 6 months from now. So I don't know, but everything I want to see is there.
Definitely, and also I want to say to everyone watching, to keep kind of updated with this, you can go to ord-oracle.com. Tim, I'm not sure if you have some of the, the equities, if you want to talk about any of that, but you get access to the newsletters right there. It's definitely worth the check out.
Next show I could present one. There's no guarantees it's going to make money, but I'll show you the techniques that I use that look at the bigger trend and why I'm long or whatever on it. And I'll pick out one, and we'll go forward from there. And maybe we'll do one a week or something.
Yeah. And everyone, if you're watching, you go to ord-oracle.com/newsletter. I mean, check it out. It's a great deal. Strongly recommend. But yeah, Tim, that would actually be pretty fun. That'd be a pretty fun thing to do.
Kind of fun. Then we can watch it, and whatever. If it went right, we'll point out the reasons why. If it went wrong, we'll point out the reasons why. But the probabilities. I start with the bigger time frames. I look at the monthlies. So the monthlies rule the weeklies rule the days, and always back. So if the monthlies fail, you're on the wrong side of the market, and so that's where you start at. But if the monthlies turn up, the odds increase substantially that stock is probably going to go up. How much up? That's another story. But I'll pick one out. We'll have one on Tuesday, and we'll kind of play with the market as we go forward here.
That'd be great. Well, Tim, thank you so much for coming on today. We'll see you Tuesday. We're looking forward to it.
All right. Thank you. Talk to you then.